Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Hope everybody is having a great week. We had tons of volatility. So let me start off. I have a few exciting things I want to share with you guys in regards to TS. So I'm going to have a class, not this week, but the week following between Christmas and New Year's, pardon me, regarding the new year, right? So we're gonna talk about some strategies for the new year, kind of outlook. Um, that's the first thing. So I'm gonna push that out coming up. Hey, good afternoon, Keith. So look for that next week. You guys can. It's a free class. For because I know a lot of people are going to be at home, kind of just relaxing or whatever for the holidays. So that's going to come in between probably Wednesday between New Year's and Christmas. That's the first thing. Second thing is, you know how we've been talking about volatility in the options, right? So I actually did a class. Some of you guys may have attended last, gosh, it was a week and a half ago now on Tuesday. I'm expanding that, and I'm really excited about this. And in fact, I tested out a couple trades that worth. They actually got us short or got me short in the S&P about 100 points ago. And what this is going to entail is in the S&P futures, and I'm taking the options volatility, and we're going to play that out in the futures market. And so if you want to kind of get a preview of that, you can join me for 5 free days, and I will be talking about that. And that's absolutely free for everybody. So if you want to sign up for that, go hit the link below. Also the newsletter. So those are the two things. So just to reiterate, and then I'll get into the markets. A class coming up, and then also my new volatility futures play that I'm excited about because it's already garnering some pretty nice results. And that's kind of taking that. You like that free? Yeah, right. So yeah, Keith, just hit the link below and come in for and watch our for 5 days. One last thing is everybody's been requesting that I show charts on on my YouTube channel or whatever. So I'm gonna, in addition to what we're doing like here on Tuesdays and Fridays, where I actually have you guys looking at your charts or whatever, I'm probably gonna insert another video midweek between the two. And it's going to be kind of a little snippet of my M3, and I actually will show you some charts in that. So look out for that as well. Okay. Some kind of a sneak little preview, and I'll be kind of analyzing the markets live and so forth. So I'm gonna put that out as well. So some good stuff coming up for the new year. Okay. All right. So let's get into again. If you want any information on that, just contact my support. Support at all the links are below, everybody. So you just contact support at transparenttrading-solutions.com. All the links are below. Newsletter, class, all that stuff. Okay, and you can just kind of hit my support staff, and then we'll link you up with whatever you want. Okay. All right. So let's get into the markets. Of course, we were in a volatility play the day of the Fed, and of course, nothing happened. But luckily, we got into another set of volatility option play, and we actually left some money on the table because as we know, Thursday the market just fell off, and primarily, by the way. I don't know if you guys realize what happened with why the market sold off on Thursday post-Fed. The retail sales and the euro, the ECB, all of that kind of culminated in essentially a much weaker economy forecast for Europe and here, coupled with like I wrote in the Twitter, uber hawkish, Powell, which really didn't do anything after the meeting, right? Because I mean, we just kind of just chopping around all over the place, and then finally the thing gave way on Thursday and today. Today was kind of OPEX. Today was options expiration, so we had a lot of kind of just back and forth. All the selling again. If you're looking at your future, this is part of the why I'm excited about our new strategy coming up here in the futures markets. If you look at your charts in the S&P, essentially that sell-off came in the Globex session, right in the after hours. If you take a look, we basically were sideways between 39, 39.20, 39.34 yesterday into the close. And you'll notice that essentially the bigger sell-off came in Europe, as London opened. How you doing, John? And then basically we just chopped around all day today, right? So today was, we did we were selling off and then we came back and, kind of making a grinding lower kind of situation there, right? And so all in all, today was a very choppy day. All the movement essentially came from the sell-off in overnight trading. So but on a big picture, just looking at the charts right now, if you guys are pulling up your, we finally broke. There was a big range, as we've been talking about forever, 2-month range, where the bottom here, if you're looking at your unadjusted chart on the S&P, was roughly around that 39.18, 39.15 area, right? And because we've held that several times, and we finally broke that down today, in fact, right? Last night, even going into yesterday's close, we were kind of hanging around there, and then today we finally gave way. Thursday and Friday, we finally gave that up. So we try to attempt the bounce out of that 38.82 that I mentioned the other day. And now, if we can consolidate in here, I do suspect we bounce back up to the breakout point, and then looks to me like going into next year, we may have much lower markets as well. Yep. How you doing, JT? All right. So yeah, because if we break through this 38.67 area, we already broke through that a little bit. There's nothing really on the charts. If you look at it, there's nothing on the charts until you get all the way back down to maybe 3,700 or so. So whether that happens here into the end of the year. One other thing I've been talking about my members about, I'll share that with you guys now, is a lot of folks kind of get complacent around the holidays, lower volume and this and that, whatever. But here's the thing. In fact, you saw that like this week, right? We're almost we're only a week from Christmas. Christmas falls on a Sunday this year. So we're actually going to have 5 full trading days next week. Yeah, that's well, actually, yeah, JT, look, remember that level, the wick over wick, 11,320, 11,266. Look it up. Check out your chart. Put up your 8-hour chart. There's a really nice wick over wick low right there. That's actually where we are kind of holding up right here, kind of bouncing it. In fact, we got to bounce out of that. So if you're going to short that thing, you got to wait for it to break that, right? Does that make sense? If you think about it, right? So in fact, what we did is we held up right there. Yeah, I don't know if you guys, when you come into this session, you should be in front of your computers, because what I'm trying to get you guys to do is, yep. No, I'm not doing that here, Keith. That's why, I'm gonna have some other videos I come in, but if you guys, you should be in front of your computers right now. You should have your charts up. And when I tell you to look at a chart, you know what I mean? I think that's actually better for you, because at least, and rather than me just showing you, yep. Well, that's why, I've had a bunch of people come into the 5-day free, and then they go, oh, okay, I see what you're talking about. And you can see the charts in the background, right? I've actually had some people zoom in on the background too, and look at all the levels of my, in the background here. I see all the levels I have. Anyways, I'm just joking, right? Yeah, but uh, Keith, if you're in front of your computer, pull up your charts, pull up an 8-hour chart, and you'll see a look at 11,320. I'm going to actually get a view level right here, right? 11,320 by 11,266.50. Keith, do you see it? You should be able to see it. I mean, it's one of those one of my favorites, right? One of my favorite types of levels. Remember what we used to call that, right? So, anyways, bottom line is this is where we held up right here. This latest sell off held up. Now the Nasdaq. One of the things also that's interesting. John, did you set it up already? Did you contact Tina at support? Yeah, yeah. Just oh, you got to do that, John. Yep. Um, just go down on the bottom of the website, you source of support, and just say, okay, or I'll have her reach out to you. How's that? Either way, right? I'm going to make a note when I get out of here. Okay, I'll have her reach out to you, and then we can set one up probably next week. Okay. All right. So, yeah. So where do we go from here? I mean, it's going to be really interesting next week. I do believe that now we're setting up for no. What I was really going to talk about a little bit right now is I don't know if you guys have been noticing, like the Nasdaq, in fact, is holding up a little bit better now than the S&P and the Dow, and that's because a lot of the stocks in the Nasdaq, particularly some of these mega caps, Amazon and Facebook and Meta and all these big mega cap stocks are pretty washed out, right? And so I think what's happening is a lot of those stocks are getting washed out. In fact, also, I would tell you, look at the chart of Apple. Remember we've been talking about that? And remember I've been mentioning, look at Apple in the low 120s, right? So where did Apple close today? So obviously Apple's a huge stock for the Nasdaq and the S&P, primarily for the Nasdaq 100. It's the biggest component. It's the biggest constituent. Okay, Keith. Yeah. This will be recorded. So again, look at your chart of Apple. It's about ready to break this 135 level, right? And so we'll see what happens with Apple. But once it gets down into those low 120s, I think that's going to be a really great opportunity. So I'll be looking at that also as well. Okay. I've been watching that, and the semiconductor stocks have been acting pretty well. Also looking at TSM, there's an interesting level coming up on TSM as well. So aside from that, one of the things again that I mentioned to my members this morning is looking at looking under the hood, if you will, right? Because a lot of times what will happen is if you look at the various stocks and various sectors, they quite often can give you a heads up on the overall market. Does that make sense? And so rather than just look at the averages, sometimes, obviously we trade off the levels on the averages and maybe some volatility, but also kind of on a bigger picture, which is I'm focused a little bit more with some of my members that have some bigger portfolios and stuff, looking on a macro to see where the possibilities. So I had a really nice discussion with my members having talking about next year. So I'll talk about that in the class, how you position your next year, what are the kind of variables that are going to take place and so forth that could impact the markets. So that's going to be coming up class. So at the end of that, so to wrap the equities up, at the end of the day, everybody, we rallied. I was with you guys on Tuesday. We had that benign CPI. Again, looking at your charts, we came right up to the prior pivot, which was 4170. We took that out by a little bit, and we know we reversed big time, right? So we had a big reversal that day. Then we went sideways during the Fed meeting, and then finally broke down today, right? Over the last couple of days, we finally broke this. And so we're kind of in no man's land, I would say, at the moment, relative to that high now. So if you take that pivot high at 4180, 81-ish, and take it down to about 3735, we're smack in between that. One negative would be on a technical basis that we did break out of the range finally, but we've also seen many false breaks and so forth. So it's going to be interesting if we can get some follow through to the downside. And what will need to happen is kind of consolidation here, setting up for a further move down. And that's kind of what I'm looking at right now. Okay. Or even a rally back up to the breakout point. So that would be some setups that you guys can take a look at on your own. Right. So that's really, to sum it up, that's kind of where it's at. Now, remember the Dow was one of the stronger markets. And in fact, the Dow also just hit a big resistance area, also similarly, right up at that 235. I mean, those were prior resistance levels up here in the Dow futures. And you can see that clearly on the charts if you look at your daily charts. And then we basically just fell off that as well. So all the kind of technical stuff is working fairly okay. Support and resistance, all the kind of traditional stuff. But we'll see how this. And in fact, the Dow is not that. I mean, the Dow still looks pretty strong to me. We'll see if that continues, and if now everybody has obviously you ever wonder that what gets everybody bearish is a down market, what gets everybody bullish is an up market. So now that we've had a pretty good down move, now everybody's starting to get bearish all of a sudden, right? So we'll see. But technically, I think it does look like we're headed lower. But as I like to say, I'm not going to get overly kind of bearish or bullish. I want to let the charts dictate what I do. And in fact, with our new volatility play, it doesn't really matter which direction we go, as long as we get a big move. That's all. That's really the most important thing. Okay. All right. Now, does that make sense? Do you have any questions before I move on from that to the equities? I'm just going to cover the different sectors. Now, the bonds really, interestingly, the bonds. And again, I still keep getting questions on this, like, why the heck did rates go down? Why has the bond market been rallying in the midst of the Fed tightening, continuing to tighten? They tightened another 50, as you know, right? They're talking super hawkish. And why does the bond market, if you look at a chart of the 10-year, the 2-year, we're actually trying to get along the 2-year right now. Why does it keep going up, meaning rates are coming down? Well, that's a function of the economy, right? If the rates, remember that the bond market is always anticipating the Fed. In fact, I would tell you that the bond market is leading the Fed. So I've talked about this before, where the bond market is always anticipating where the Fed's going to go. And remember, the Fed only controls short rates. They don't control the 10-year or the 20 or the 30-year. And so the bond market is leading the way right now. So what the bond market is telling us is that they're probably closer to the end of the tightening cycle, and also possibly telegraphing, the inversion in the yield curve, and also the fact that bonds have been rallying here for the last, month and a half also suggests that the economy is probably going to go into recession next year, I should say. Okay. Now, any levels on the 10-year, I think if you look at the 10-year for the last 2 weeks now, it's been trading sideways between 129 and one. I'm sorry, not the, that's the, the 10-year is 115 to 113, roughly 113.25. So you can clearly see it's kind of just been chopping around in a range now for going on 2 weeks. So we'll see how that, what's going to break that out. I don't know. It's going to be tricky. Yep. So anyways, that's really, so I would say surprisingly, all the movement is in the stocks right now because bonds haven't really moved a whole lot in the last, and even through this week where we had a lot of movement in the stock market. If you look at your charts of the 10-year or the 5-year or the 30-year, we haven't had a ton of movement, right? And so it's really interesting to see how that. So we'll see how that goes. Okay. And also the dollar. So let's move on to the dollar. Just kind of going through my little watch list here. The dollar held 103. I think I mentioned this on Tuesday. That we were inside this big weekly accumulation, 104.60, 103. You can see we had a nice pop out of that. And in fact, kind of mentioning to my members this morning, there is a possibility that the dollar, because of the U.S., you remember how Europe, if you were watching the ECB yesterday, part of the reason why the dollar moved the way it did is because they're going to tighten. They're also going to tighten 50 basis points, which I don't think they've ever done in Europe. Also, the economy there is probably going to go into a much deeper recession. And for that reason, the euro, I think, is going to have a problem, and i.e. the dollar is probably going to start picking up. So looks to me like the dollar, if we can break above 106, this could be the entire move in the dollar down. Okay. For next year, we could get a resurgence of the dollar moving higher. So that's going to be interesting. And again, it's not my opinion. I'm just looking at the charts, right? So that would be interesting because if that happens, all the currencies are heading right back down. All the currencies have had some nice moves higher, and this could be setting up for further declines in the euro, British pound, just across the board in the futures markets. People ask me if I trade forex, the spot forex, and I do not. Never have, never will. So I just look at futures. On the future side, it's easy, right? There's no cross pairing. It's just dollar. You just watch the dollar index as your kind of beacon, if you will, right? So that's pretty much on the dollar. Watch that 106 level on the dollar index, the DXY, the Dixie. Because if we take that out to the upside, I think that sets up for the dollar probably rallying all the way back up to 108, 110. Okay. That's going to be interesting. Probably going into Q1 2023. Okay. All right. Let's see. What else is energy? Oil hit a level. In fact, some of my members took a short here at 77.31. 77.89. You can see that on the charts. And again, another kind of drop area here in oil. All in all, I would say oil probably in a big range. I'm still looking at oil below $60 and USO. So I did talk about that. Hopefully that comes in next week. We're going to try to get long either on the futures or on the USO as well. Okay. Because I do believe oil, I'm still fairly bullish on oil long term. There's still a lot of fundamental reasons to be bullish on energy across the board, really. So that's a market, and I think a week ago I wrote about it. I told you guys, with the OPEC plus meeting and all that, and sure enough, we had a ton of volatility in oil. I do expect that that's going to continue. Okay. Also, nat gas. Nat gas looks like now it's forming a range between 7 and well, it's been in a range, right? Continues to be in a range. Very volatile between, I would say 5 and 7. Let's call it 5 and 7. So what that sets up for, if you're a trader, is as it approaches the 5 level MBTU, millions BTU, you would be looking to buy it, and then as it pushes up around the 7, the 7 area, you look to sell it. Pretty cut and dry, right? But again, you got to be aware, you got to be careful with this thing, caveat, because it is an extremely volatile market. We typically use the QG, which is the quarter size contract, right? It's QG on Thinkorswim. I don't know what it is on TradeStation. It's the quarter size futures contract, nat gas. So, but it's a great little market. I mean, it's a great market, but you got to be careful. And then UNG is something I've talked about. We're also looking at UNG as well there. Okay, and then nothing really on the grain markets. Just to kind of finish up. Not a lot going on in the grain markets. Again, just to give you some idea here, looks like this could be setting up for something. I've been talking about a little bit about wheat and corn and soybeans. The one market I think I mentioned this if you watch the recording from Tuesday, is the soy meal. Check that out. $10 a tick. Broke out above 445. If you haven't traded that, again, very, $10 a tick. So it moves quite a bit. I mean, it went from 449, it hit a level 449, traded all the way up to 63 and back. So, I mean, at $10 a point, that's a pretty good move, right? So watch soy meal. Okay. There are some levels coming up that I'm on the distribution or the sell side above 480, and then on the downside where it broke out from, there's some levels down around the 444 area on soy meal. Okay. Other than that, really, it's going to be. By the way, just parting shot. Next week, I do believe if you're going to be out and about or whatever, I know it's going to come Christmas and everybody's going to be out shopping or whatever. I do believe you're going to have tons of opportunity next week. I don't see the market just kind of shutting down for the holidays. In fact, I think there's going to be a ton of volatility next week in the equities. Okay, so be prepared for that. We also have FedEx earnings, and yep. JT, I think again, the style of trading that I advocate, as you know, I'm not saying sit there and in front of your screen all day and none of that. I'm saying is if you have the right opportunities, kind of a set and forget style opportunities, you're going to get some great opportunity next week, right? That's what I'm saying, because I think we're going to get a ton of movement next week. This week today set us up for next week, and here's why, and then I'll finish up here. Thinner markets create momentum. Yes, the thinner a market. You ever notice, like when a market gets really? Why do you think you get all the movement in the after hours most of the time? Right? Where do you get the momentum? Again, look at your chart of the S&P. When did the biggest momentum move happen? In London, right? Last night, because that's when the markets are thin. That's when algos can take over and move the market. So a thin market or lack of participation actually creates momentum, right? And so, Oh, okay. So you can't trade on the Globex, JT? Can you reopen your positions at 3 o'clock when the futures open again? Oh, okay. Well, that's awesome because that's when you can position for the overnight trading, right? Well, that's the thing that I'm going to start doing. Volatility, right? Volatility. That's those are actually when you set up the best volatility plays for overnight. Correct. So, anyways, all right, everybody, have a great weekend. Again, just one quick little promo down below. You'll see the links. You want to spend 5 days with me next week. You want to have a class. We're going to have a class coming up, and so on and so forth. You guys know where to reach me. You can also private message me on Twitter. If you guys know where I'm at on Twitter. Yep. Okay. All right, everybody. I'll see you guys at the end of the. I'll see you guys on Tuesday. I am going to do Tuesday and Friday, even though, then we're going to go Christmas. Like Monday, I think we have off, right? Not this coming Monday, but the following Monday, right? So, anyways, okay, everybody, have a great weekend, and I'll see you on Tuesday. Take care. By the way, let people know about our channel. I want to grow it, and I'm going to send out. Just look out for my mid-session recorded video where I will be talking. You'll see some charts and stuff. I'll do some analysis and stuff. Okay. All right. Take care, everybody. Have a great weekend.